Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of my subscription service that I offer, the Inner Circle. Before we dig in, a couple of quick disclaimers. First off, we are going to be looking at the week of 4/8/19. Why are you going so far back, Clay? That's a more than fair question. Two reasons. First off, it's just simply giving the chart plenty of time to play out so that we can actually see what has happened. And then second, it's a matter of being fair. I mean, the last thing I would want is for somebody to pay for the subscription and all of a sudden see what they just paid for out there for everybody to see for free. That wouldn't be very fair to them, and they would be totally justified in feeling ripped off. So that's the first thing. Second big disclosure is I do not want to try to come across and imply that everything I send out is a winner. Everything is always rainbows and butterflies. No, that's not how it works. I am not perfect. Nobody is perfect. No scan is perfect. So losses happen. But that does lead into a very important lesson and underlying theme that you always need to keep in mind about risk control, risk analysis, because losses happen. So you want to make sure that when they do happen, they're minimized and nothing spins out of control, because the other part of that coin is winners also happen. So when those winners do come along, you want to make sure that your account is in the best possible spot to, just keep on being projected in that upwards direction. So definitely a very important lesson. But yes, I am not perfect, and nobody is. And anybody that tries to imply that they're never wrong, I would run the other way. So with that being said, I want to first establish a little bit of upfront context, and then we'll get into the scans. I know from feedback, a lot of you are, this is good. This is helping you kill those greed voices, which is great. It's all about perspective. But from bank rate, we've been keeping up on the CD rates, which is the certificate of deposit. So across the market in May, actually the averages here, 1 year, 0.88%, 5 years, 1.44%. But let's actually see what the best ones are from around, the market. So there we go. Let's see, First National Bank of America right there. Oh, nice. 2.85% for 2 years. Oh, here we go. Here's only 1 year and 2.8%. So let's go with that one. 2.8% for 1 year. Just keep that in the back of your mind as we progress through these alerts. But let's get to the scans. Real quick before I forget, one of the big questions I always get, Clay, what sort of price ranges do you cover? I don't care about price. I care about probabilities of success. I care about, do I think it's going to be a winning trade? So the price is very low down on my kind of to-do list, if you will. And as you're going to see here, there's quite the array of prices. So just like I said, prices, I don't care about that. My goal is to bring high probability trades. Okay, so that's the main driving function. Second big question, Clay, when do these actually go out? They go out over the weekend. That way you have plenty of time. So it's not like you get a text message alert and then you have to run someplace, make a very quick and rash decision. Nothing like that. You have plenty of time to look things over and then do what you got to do. But by no means is any of this some sort of like very, very quick decision. So what you see here, though, is the page where they're found. And I'm going to go over 4 of these, but I am not going to be going over SQ, and I'll just quickly go down there and let's see. So SQ right here. And the reason for that is if you were to pull up the chart, you would see that this comes down and it moves a meg, but then it gets like rejected directly. And then eventually just goes to the downside. So in this situation, there was no play on it. I mean, I could have said from the short side, you can play. That's fooling around with the numbers too much in my favor. So, but I mean, for this one, the reason I'm not covering it is not because it was even a loser. It's just simply there was never a play because it never, got the breakout from there or at all. But let's get to these actual scans. So the theme of this, I want to, just kind of how to make money in the markets. Now, this is very broad, so I'm not saying you go and you copy exactly what you see here. I am keeping it very surface deep. So I also want to make that disclosure. It may seem simple, and in ways it is once you understand the details behind it, but I'm not going to be going over the details behind stuff, okay? So just keep that in mind, but some general overall ways to make money in the market. The first way is don't chase, okay? Do not chase prices. That's a really bad habit to have. So TGI was this one. And the whole idea here was, hey, is there some sort of gap close coming? So meaning don't chase, don't just go out there and start to buy, up around here. That would be chasing. The whole idea here is, hey, let's see if this gap closes. Let's see if the price pulls back. So let's see how this one played out. So again, these were sent out over the weekend. So what you see here is what the chart looked like over the weekend. So the next candle you'll see will just be the Monday. So let's see. Don't chase, but be patient. Let prices come to you. So you can see right there, pulled back, but still wasn't quite at that gap close location. And then right there, I mean, almost to a T, the power of charts, hit that green line, hit it again just for good measure. Members, plenty of opportunity to get in. And then you can see worked its way back upwards and made a nice solid move there. So 14.8%. And I don't know, let's just call it a couple of weeks. So is that a massive percentage? No, it's not massive. But when you compare it to 2.8% for 1 year, so let's say you screwed up half the trade and you only got 7%. Okay, 7% in 2 weeks or 2.8% for 1 year. I think I'm going to take the 7% in 2 weeks. But again, what was the lesson? How do you make money in the markets? Don't chase. Don't chase. Have a plan. Let prices come to you. And you can see right here, beautiful entry point. And then you had an opportunity in total of 14.8%. So even if you screwed up half of it, you still walked away with 7% in less than 2 weeks. Not bad at all. Our next one here was AVGR. So how do you make money in the markets? Well, go with the trend. Go with the trend, and that's what we have here. Just a nice overall trend. I make the comment about how it's pulled back right here, and that, hey, if you still believe in this overall trend, keep an eye on it. This thing could play out nicely. So let's see how it did play out. Quickly before we see how this went, now take a look at the price. We were just looking at a $20 stock. Now we're looking at something that's below $1. So like I said, there's a variety of price ranges, but it's all about the probabilities. Do I think this could be a winner? So let's see how this one played out. So Monday, you can see pulled back some more. Tuesday, went right down to that moving average, which happened to coincide nicely with the trend line right there. So definitely a more than fair, a more than realistic potential at an entry, and then got the gap up right there. Granted, it was a gap and trap, but that is where that was still a more than fair move, and that move was actually good for 41.6%. Now, did you play it perfectly? Did you know that was going to be a gap and trap when it happened? Of course not. So let's just say you screwed up. Let's say you screwed up 75% of the trade. That's still a 10% move. 10% move in 2 days. So 10% in 2 days. And again, that's assuming you screwed up literally 75% of the trade. But 10% in 2 days or 2.8% in 1 year. I'm not a mathematical genius, but I know which one I would choose. But then again, how do you make money in the market? Like I said, go with the trend. I'm going to offer up a little spoiler. This has been one of my favorite ones that have played out in quite a while because, we are looking at a $200 stock. So how do you make money in the markets? Learn options. As I say right here, option strategies available. So because I get it. Yeah, that's a lot per share. I try to avoid these stocks too because, that's a lot. Now, not everybody in the community does. Like I said, I care about probabilities. But how do you make money in the markets? Learn about options. It's a great way to participate in pricier stocks like this. And even if you have an account, let's just say at $1,000, you could be getting involved with these sorts of chart setups, not with the stock directly, but with options. So another way, how do you make money? Learn options. Let's see how this one played out. So let's go through. Right there, pulled back again, just doing some consolidating. Notice how it's just that green line. Absolute thing of beauty. And then the party started. And that party just kept on going. And going even more for a 34.7% move. On a $200 stock, 34%, that means that the options on that one, hundreds and hundreds of percents for sure. And if you understand options and how those work, you would not disbelieve that at all. You would say, oh yeah, Clay, you're actually probably being conservative. Some of those options might have very well gotten up over 1,000% on, if the underlying stock, the actual stock moved 34.7%. The power of charts. How do you make money in the market? Learn options because I get it. It is a pricey stock. But even if you had a $500,000 account size, you could have gotten involved into this. But there's nothing better than just nailing a pricier stock. 34% on a penny stock is kind of like, okay, that doesn't mean really that much at all. It's a penny stock. But 34.7% on a $200 stock, the power of charts. I love charts. The final and I think most, freeing and powerful lesson here of how do you make money in the markets? Get knowledge. Don't just hold yourself in a box. And I'll explain what I mean by this. So this was for ZYNE, and the whole idea here was, hey, is this going to, move back down there and test the breakout that had already happened? So there was a pattern breakout. Is it going to retest it? So let's see how this one played out. But remember, how do you make money? You got to have just knowledge of the market, knowledge of a strategy. You got to be able to think for yourself. So let's see what I mean. Once again, from a price perspective, we just went from a $200 stock. Now we're looking at something below $10. And I want to, just so you know, and anybody that understands charts, has good chart vision, is going to see that exactly what is drawn out is by no means some sort of stretch on my part. It's by no means some sort of, oh, come on, Clay, you're kind of fitting a square peg through a round hole with that. No, this is basic stuff. Now, don't get me wrong. Even if you see it, that doesn't mean you're necessarily ready to go out there and trade it. Remember my first disclaimer. I'm just talking about broad ideas. But my point here is that, yes, the original thing that I talked about does not happen. But in the process of you watching what does happen, if you have general knowledge, you could have been very realistically said, oh, wait, sure, that's not what's happening from the original alert that Clay made, but I see this happening. So I'm going to act on this, and you would know to act on this because, well, you have that general knowledge. So let's see how this one played out. So there is Monday. It pulled back, went down to that general area, bounced again, went up there. Oh, look, was rejected again, pulled back. And at this point, and let me say pulled back again. So you can see, I mean, we have just the beautiful bull pennant pattern. Bull flag, really a bull pennant, but whatever. The idea here is that now the chart has shifted. Sure, again, it hasn't gone back and done what I originally alerted, but there's a very well-defined pattern there. Now, if you say, I don't see any pattern, that's okay. You just need to work on your chart vision, and there's nothing wrong with that. I mean, we all start out, but if you have, like I said, even really just a basic understanding, I'm sure you see the pattern that is now formed. So let's stay with it. And again, just more confirmation that the pattern gets better, and just like that, the breakout occurs on solid volume. So let's see how this plays out. So again, it didn't go according to what I said, but if you were following it and you had general knowledge, this is how you make money in the market, because you notice that very well-defined pattern, and you can see that things just got quite eventful. And you can see right there, that has been a move so far of 88%. I say so far because as of the recording of this, I mean, it's basically in the start of a new breakout, the volume and all that, but that's 88% possible profit window in, a few weeks. So again, let's say you screwed up half of it and you only got 40%. Okay, 40%, and let's just call it a month. 40% in 1 month or 2.8% for 1 year. That speaks for itself. But how do you make money in the markets? Get knowledge. Get a true understanding about how all this works. And then finally, if you are interested in joining the community, the service where you would get these scans, you can just go to claytrader.com/team, and you get a lot of other stuff. You get the live chat room, and these are the other things that come with it. There's the mobile app, which is always a big one. So it's not like you need to stay chained to your computer in order to stay in touch. There's a mobile app, and there's a lot of other good things out there, that come with it. And as far as the prices, $99 for 3 months. So the question that you really need to ask yourself is, do I think that this service can lead me to make more than $8.25 per week? Because that's what that breaks down to. If you say, yeah, I'm pretty confident in myself that this service will be able to complement me and get me to make more than $8.25 per week, then there you go. That would be a good investment on your part. If you sit there and say, I don't know if this can lead me to $8.25, then yeah, that would be a bad investment. That would be a losing investment on your part. So that's really the question that breaks down. Now, if you do it for the year, that $8.25 mark goes down even lower. But just even at that one, that's the key question. Do I think that there's enough value here to complement me to make more than $8.25? And if you think you can make more than $8.25 per week, then get signed up and I'll see you on the inside.